It's getting about that time of year where we have to actually focus on getting our taxes prepared. Oh gosh, I hate it. I don't like it. It's not something I look forward to, but when I'm done with it, I feel very relieved. And you're probably saying, well, gosh, this podcast, it's actually airing in late December. So what gives, Dale? I still have till April, right? Well, that's probably not the best way to prepare for your taxes. In fact, actually, my guest Erin is actually going to share why you want to get a jump on it now instead of waiting till later. And of course, what are some of the best practices that you can put into place to make sure that you are 100% prepared and that you have the right tax professional in your corner. So without any further ado, let's get into the interview with Erin Engelbrecht. So Erin, we've already been jib-jabbing and just chatting up. Man, we've been going, how long have we known each other now? I mean, we knew you back in Arizona.
Yes, I started that networking group, that bootstrapping entrepreneurs think tank, the BET that we had at the library.
Yeah.
And I think I started that in 2016, and I think that's when we met.
Yeah,
And
early 2016, late 2015. Yeah, because that was so
something
much
like
fun.
that.
And it was crazy because Kelly and I originally were working with other CPAs. And it wasn't until we
Oh,
ran into an issue when we came out here to Ohio. No offense, but this older gentleman just didn't know, whether to, or wind his watch, because he just honestly was like, and you had to go and undo some of the mess that he was doing through there. And that just really speaks volumes about how you work as an accountant. But let's dial it back just a little bit and talk a little bit more. We're getting towards the end of the year right now as we're recording this. And you and I were having the conversation about how important it is to get a jump on your taxes rather than waiting until January to start putting everything together. So let's walk it back here. Let's talk a little bit more about taxes and filing them and some of the best practices for entrepreneurs, whether they're hobbyists or even full-time entrepreneurs.
correct. So there are a few things to take into consideration, and the first one is that if you're not currently working with an accountant and you'd like to, I would start the search in December, because come January or later, we're all tied up pretty much. So especially if someone's been recommended to you specifically, and especially if it's like a solo practitioner like myself or a small firm with just a few staff, there's only a finite amount of people and everyone has the same tax deadline. There's only one or a few of us. So I would say if you do want to work with someone who's been recommended to you or someone that you just really have had your eye on, I would contact them sooner rather than later, because come January, maybe January is okay. I don't know. I can't speak for every accountant, but I know for me, my personal preference is the sooner the better, because I've literally had people contact me on April 8th
Oh, no.
saying, can you fit me in? Because
Yeah.
and I get it, people just don't realize it, and I understand that, but it's like there's one of me, there's hundreds of clients, and they all have the same deadline, and if you're calling me a week before the deadline, I probably can't fit you in.
Yeah.
And I just think it's just people just don't realize it. They don't think about it, because they don't do it for a living. So, and I mean, I know a lot of my colleagues just having discussions is, even as early as February, if somebody new comes to them, they'll say, well, I'm going to file an extension for you like right now, because I already know I'm not going to be able to get you filed by April 15th. So it can happen as early as February where they say, sorry, can't help you. And I know that kind of blows some people's minds. Like, I can't believe I came to them 3 months or 2 months before the deadline.
Yeah.
How can they not fit me in? But it's like, well, they probably have hundreds, if not thousands of clients.
Yeah.
And we have to manage all of these things. So it's almost like a first come, first serve. So if you want to secure somebody specific, I would definitely reach out to them sooner rather than later. But also on top of that, if you're looking for tax strategies to save on taxes, most strategies have to occur during the year.
Oh, yeah.
Once the year is over, your options become extremely limited, if you have any options at all. And I get that a lot too, where I'll talk to someone in January or later and they'll say, hey, what can I do to save taxes for last year? And I'm like, well, it's too late for the most part.
Yeah.
There's one or two possibilities, but they might not be applicable to you. So, and I don't think people realize that, is that like once something is transpired, it's transpired. You can't roll back the hands of time and change things. And again, I just think just people don't know what they don't know. It's not their area
Yeah.
of expertise. So get with that expert. And December might be too late for tax strategies because really it's a very proactive activity, not reactive. And
Yeah.
usually, tax strategies are implemented and exercised throughout the entire year. But sometimes it's never too late. So if you can get with someone in December, there might be some last minute things you can do if you are looking to save on taxes, or at least get the knowledge of what your options are to save on taxes. So
Mhm.
that's just, I think those are two very important things that need to be considered before the year ends, is securing an accountant if you're interested in working with an accountant, and also any tax strategies that you might need to save on taxes if you're at that position where you're making good money and you're looking to save a few bucks on your taxes. But there's other things too to think about,
Mhm.
just like your books,
Yeah.
bookkeeping, receipts, getting your receipts together for you.
Yep.
um, Everyone's so different. Everyone has different type A, type B, organized, not organized. But
Mhm.
at the end of the day, when you're doing taxes, there has to be some level of organization. So whether you do the organization or you hire somebody to do it is up to you, or what your budget looks like. But receipts, a question I get a lot is what receipts should I save?
Mhm.
Well, all of them.
Yeah. Yeah. It's a pain,
you,
but
you Yes. Luckily, they can be electronic. They don't have to be paper. You can
yeah.
scan them and store them. The IRS has been accepting scanned copies forever now. Or if you have like an email receipt, you can either print the email to in PDF or just save the email. But as long as you have some form of a receipt to support everything you did, for your records. And
Yeah.
that's another misconception, is like when I do taxes, and this is like for people where I don't do their books, where they do them on their own or somebody else does them. But
Yeah.
my expectation is that that person can provide me a clean profit and loss statement, a clean balance sheet. I don't need to see the receipts, because if I do, like, and we call those shoebox clients, because back in the day with CPA firms, they would literally have a shoebox full of receipts, sometimes garbage bags full of
Oh my
receipts.
gosh, I can't even
And
imagine.
I know it's a nightmare. And there are a lot of CPAs that will take these paper receipts and they'll collate them and organize them and basically do the bookkeeping off of receipts.
Mhm.
But if you want to go that direction, and you can, you're going to pay a lot more for your tax preparation, because
Oh
now you've
yeah.
kind of tacked on bookkeeping with it. So and I'll do that, but there's a premium for that service. So if people are trying to save a few bucks, we want you to have your receipts, of course, because people will say, well, do you need me to upload all my receipts, for you to look at, like, say, for my medical expenses, as an example. And I said, I'm like, no, I don't need to see them. Just make sure you have them.
Mhm.
It's your responsibility to total everything up. Like, how much did you spend on, for your business, like advertising? How much did you spend on office supplies? I don't need to see all the detail to do your tax return,
Yeah.
but you have to have these receipts, because if you get audited, you will most likely get a letter. Gone are the days where some agent's going to knock on your door. Unless,
Right,
like,
right.
you're evading millions of dollars worth of taxes, then you might get a knock on the door. But for the average person,
Mhm.
you're not going to get that knock on the door. You're going to get a letter saying, we have questions. Will you please send us copies of receipts? And they'll be very specific for your advertising or for your office supplies or for your travel. And guess what? You have to send them copies of all your receipts. And if they don't total up to what you claimed, then they start making adjustments to
Oh,
your tax return.
that's got
So
to
I
be a
tell people,
nightmare.
I couldn't even imagine. So I tell people, like, my job, one of my jobs is, I can't make you audit proof. I can't control the IRS and who they pick for an audit. But what I can do is make sure that if you get picked, you will be prepared and you will survive the audit. And
Yeah.
so one of the things is that at the end of the year, get your receipts in some kind of order. I mean, even if it's just a matter of, I scan them all and they're in one folder on my desktop, great. That's better than nothing.
Yeah.
At least they're consolidated in one place. But you got just gather them up, and also the mileage log, because that comes up quite a bit too. Because a
Yeah.
lot of people, especially smaller businesses or like in your industry, they're just using a personal vehicle to drive around to
Hmm.
run business errands. And in order to claim that mileage, you got to maintain a log throughout the year. So um, I encourage people to maintain it on a weekly, monthly basis. But let's face it, not everyone's good with that. Not everyone's good about it. It's just a low priority. And I understand that. But what I would recommend is before the year ends to catch that up um,
Yeah.
for the whole year. So it is done, because the IRS does state that it does have to be maintained. And there have actually been tax court cases where somebody reconstructed their log after the fact. The mileage they claimed was real. They really did do it.
Hmm.
But guess what? The IRS still disallowed it because they did not
Interesting.
maintain it. Yeah, so they said, we
Oh,
understand you didn't lie that this mileage is real, but you didn't follow the rule of maintaining, and therefore we're going to disallow it. So
interesting. Oh my
do yourself
gosh.
that favor and be as diligent as possible. And again, I understand not everyone is a paperwork person. If you're not a type A personality, it might be challenging, but it's part of just having your own business. There are lots of things you do in your business that you don't like, as you know, and as I know,
Oh
having
yeah.
our own
Taxes
businesses.
is never something fun for me, and this is a huge reason why we lean on you so much. I want to kind of walk back just a little bit because I'm sure there's some
Sure.
listeners here on the podcast that are going mileage. What does she mean by mileage? And I want to kind of share some of what Kelly does for best practices. My wife, she keeps a log in the car, and anytime we have something that's business related, whether we're going to the airport to catch a plane out to, a conference, or we're driving to a local meetup for professionals, we typically will write down where we're starting in mileage. And then when we get back home, where we end in mileage. And we're so diligent about that. Like Kelly's like, if I go and do something business related, I go to the store to pick up some supplies. She'll go, did you write the mileage down? So let's kind of break down the whole idea of mileage and give me some best practices that would be easy for people to implement today when it comes to tracking mileage.
Okay, well, the IRS, they value substance over form. So they don't care if you use a paper log. You can use a mileage app like Mile IQ if you'd like. A lot of people
Nice.
love technology, so the apps are great. And if you use QuickBooks, QuickBooks has a built-in free of charge mileage tracker as well.
I
If you
didn't
go,
know that.
yes, yeah,
I've
and
been
you can do
spending $34 a month and I didn't know this.
Yes, it's a built-in app, and you can have actually multiple vehicles
Wow.
in case, because some people do have more than one vehicle. So you can use an app. I mean, they don't really care. Paper app, stone tablet, if you're chiseling the mileage in. Um, but as long as the pieces of information are there. So there's four major pieces of information a mileage log needs. First of all, is the date of the trip that you make for business purposes.
Okay.
The second is the distance you traveled or beginning and ending odometer reading.
Okay.
The third is the destination, I mean, like an address or a general location. And then the last and most important component is the reason. And it can be very brief. You don't have to write a novel. It like a met Joe Smith prospective client. It can
Okay.
be that brief, just so you have something down, because people think, oh, I'll remember. You just don't.
No, you
I
don't.
don't care how good a memory you have. I mean, I think I have a pretty good memory. I don't remember everything. And people think, oh, no, I'll remember. It's fine. So that's why I encourage people to maintain, because you just don't remember.
Yeah.
But with an app, it's nice because you just tap, like, especially with like Mile IQ, is you can even tap if it's personal or business, and it just
Okay.
starts tracking it, and it basically enters all the information except the reason for the trip. And I believe that with most mileage apps, there is some kind of description field where you can type something in real quick, type in that little blurb as for the reason for the trip. So I encourage people to do it at a minimum on a monthly basis. But if you drive a lot, you might want to do it weekly or daily. But that way, when the
Yeah.
time comes when your accountant For me personally, when I ask clients for mileage, I don't necessarily need to see their log, but I want to know they have one, because one of the questions on the tax return, and no matter what type of return you do file, there is a question that says, did you maintain a log? And yes or no. And so that's one of the questions I ask clients. I said, I don't need to see it necessarily, but do you have one? Now, a lot of clients, they'll just export some kind of summary just to give me the pieces of information I need, but I don't need like every single entry. I just need totals. But it just depends on the app. Sometimes they just export the PDF for the whole year, and I just look at the last page. So
Yeah.
I would say just, incorporate an app or use a paper log. You can keep it in the glove compartment of your vehicle. Again, it doesn't really matter what medium you use as long as you're maintaining it, because mileage it is a very big and generous deduction. What it is the IRS has done a calculation on the average cost of maintaining a car per mile. This includes gas, insurance, registration, oil changes, repairs, insurance, everything, and depreciation as well. So it kind of does some general formula, and it's not model specific to any car. So and they're usually very generous with the amount that they'll let you deduct per mile. The other option is deducting actual expenses, and that's a lot of record keeping. So I encourage people who don't really like paperwork that doing mileage is going to be a far less record keeping versus actual, where you have to literally have every gas receipt, every repair receipt, everything. And then there's a formula to figure out how much of those costs are deductible. It's a percentage of the time you use the vehicle for business versus personal. It's a lot of record keeping on the person's end. And usually the mileage deduction is higher anyway, unless your vehicle like had just an ungodly amount of repairs, like a lot of repairs. If you just have a normal vehicle that is just normal maintenance and no repairs or little repairs, I almost guarantee you that the mileage deduction is going to be the higher deduction.
Nice. So we opened up a whole can of worms here. What I would
Yeah.
like to do is maybe we just focus a little bit more on, we're going into the new year. Obviously, people need to kind of get themselves ready for taxes. Let's say you've got the perfect client. They get everything in order and prepared for you. What are those items that they would get in order for you to do your job in the most efficient way possible? And that way that their bill of paying you is a lot less than, say, what it would normally be if they were, for instance, bringing in a trash bag full of receipts.
Right. So if we're narrowing it down to people who like have their own business, and assuming I don't do their bookkeeping, the ideal situation for me is that they have a clean profit and loss statement, a clean balance sheet in certain circumstances. I mean, and this is like another can of worms. It depends on what kind of return they file.
Okay.
Depending on the return, sometimes I need a balance sheet, sometimes I don't. But you should have one anyway. I mean, honestly, these are financial statements that any business owner should be looking at all the time.
Yeah.
This is telling you how your business is doing. It is gauging the health of your business. You should be using this as a business owner to be like, okay, what am I spending all my money on? Is this too much? Is this not enough? How is it relative to revenue? What does my profit look like? Are my costs too high? So these are things that people should have anyway, just to manage their business and just understand how their business is doing. But for me, just if I have a clean financial statement, profit and loss balance sheet, that's half the battle right there. Because then what does clean mean? That's a whole other topic, is what does clean look like?
Yeah.
And I don't even know how I begin explaining that. I know like my biggest pet peeve is when on a profit and loss, you have all these different expense items, like by category: advertising, office supplies, travel, meals, et cetera, et cetera. I think my pet peeve is seeing a line called miscellaneous.
You're like, what is this?
Yeah. The IRS doesn't like it. It's too vague. It's way too vague. And you're just giving them an opening to be like, well, we need to follow up on this because we don't know what this is. Now, if it's some small amount, like if it's $20, who cares? But but I've seen profit and losses where there's $48,000 in miscellaneous expenses.
Well,
And
now
I'm
that's
like,
when it gets a little bit suspect.
yeah, I mean, and it might be fine, but the thing is I don't know if it's fine. And then I
Yeah.
have to start asking all these questions. What is this? Can you give me the breakdown? So I tend
Oh,
to stay
Erin, why are
away
you so
from,
nosy about it? It's
I
$48,000. Just let
know.
it go.
It's fine. It's fine. You're fine. Just get me through the audit and I'll be fine.
Right, right.
So yeah, so it's and again, from the business owner's perspective, are you going to remember what that is? Believe it or not, I have clients where I do their books every month, and these are clients that like kind of like you, where sometimes I don't know what something is, and you have to tell me what it is. So that I have clients like that where it's like, okay, I don't know what this is. All right, they tell me, and then a few months down the road, they're like, what is this? And I'm like, well, you told me what it is, because people don't remember. They just don't.
Yeah.
They
Which,
just
by the way,
don't.
do I still hold the record for fastest client? Usually,
You are
usually
definitely,
I got to be in
yeah,
the
you are
top
definitely.
five.
If just off the top of my head, I would say you're like in the top two.
Hey, all
Yeah.
right. See,
So
I'm record fast.
you are very responsive, which I appreciate greatly, because what I tell people is this: I want people to be as responsive to me as you would want me to be responsive to you. I mean,
Yep.
what if you had to wait 2 weeks to hear back from me? You probably wouldn't be happy.
I would be
So
going
I'm not
crazy. Yeah, exactly. That's
right,
why I'm
right.
so
So
fast.
yeah, so I mean, and I understand people are busy. I understand
Yeah.
that you just can't drop everything you're doing, and I don't expect people to. I know people have their
Yeah.
businesses to run; they have a life outside their business. I get it, but yeah. So the perfect client would just be one where it just clean financials if I don't do their books, and on top of that, just being responsive and not making a lot of assumptions. Just I would rather have people provide too much information than not enough. But don't give me
Ooh.
receipts like
Yeah.
but
Keep the bag of receipts if you can help it.
yeah. But I would say just I would say in general, and I mean I can't speak for every single accountant, just my personal experience, but I think probably people would agree. Other tax preparers would agree with me. Is that if we're asking you something, it's because we need it. We're not
Yeah.
being judgy or nosy. It's just there's a reason. And you know what? If you don't understand, then ask. I am more than happy
Yeah.
to enlighten and educate. We're like, hey, why do you need this number? And then I'll explain why. But usually, if they're asking, they need it for some reason. We just don't ask for information for our health. We're too busy to get unnecessary information. But please ask. I always appreciate questions. That lets me know that people are paying attention. And I
Yeah.
understand they're relying on me for the expertise, but if something doesn't look right to you, or if you really want to know what something is, you want to just have a better grip on it, please ask. I encourage it and I appreciate it, because I want people to feel comfortable with the situation. It's like, yeah, I'm relying on this person and their expertise, but I want people to be like participating in the process. So I
Yeah.
appreciate responsiveness. I appreciate, when people review like a draft of their tax return before we file it. When people say, hey, what's this? What's this? I don't understand this. I like that. That means they looked at it. Because
Yeah.
what I don't like is, and this has happened many, many times to me, is I send a draft, and the process, I do it with you guys,
Yep.
is I send you a draft and say, hey, does this look okay? Do you have any questions? Are you okay with it? If there are some tweaks to make, I make them, of course, send you an updated draft. But if everything looks good, then we file. What happens a lot, and it's very frustrating on my end, is I go through that. Here's the draft. Okay, no questions. They pay me. Okay, fine, we file. And then literally days after it's filed, they're like, well, what's this? What
Why did you
happened
ask
there?
now?
And remember, I'm human too. I have feelings, and we're not robots. And so yeah, so it's like, oh my gosh, like I gave you every opportunity in the world to
Yeah.
review this. And most of the time it's fine. It's not like we have to amend anything, but it's just like, it'd be nice if you just ask these questions before we file, because I want people to be comfortable. But I think sometimes maybe they're in a hurry, or they got other things going on, and there's like, yeah, fine, just file it and stuff. But so that is a source of frustration on my end, because I am here for my clients, and I want them to understand, to whatever extent they want to understand what's going on. So yeah, so just responsiveness is great, diligence is great, having clean stuff is great. I mean, that really is a good client to me. is just someone. It's a two-way street. It really is. It's a two-way street. I'm relying on you for certain things. You're relying on me for certain things, and we got to work together. I'm rooting for you. I'm rooting for my clients. I'm here for you. I'm not working against you, but I have to follow the law too. So sometimes I have to be the bad guy. But my job is to, produce an accurate tax return, but also to again have you survive an audit if you do get audited, and make sure that you are prepared, because there is almost nothing scarier than getting a letter in the mail from the IRS.
You've been listening to the Self-Publishing with Dale podcast. Visit us at selfpublishingwithdale.com for more information on how you can level up your self-publishing business. Also, check out our growing video-on-demand service, chock full of free and premium content, when you head over to theselfpublishinghub.com. If you enjoyed the show, please consider leaving a review on your preferred podcasting platform. We thank you for tuning in, and we'll see you in the next episode.